All right. Hello and good afternoon, everyone. We will get started here in just about 2 minutes. Go ahead, throw something in the chat. Let us know where you're tuning in from. And Nick will join us here in just a moment. Guess that was my that was the end of my soundtrack. So I'll just get us ready here. It looks like Nick is in the room, but go ahead, throw something in the chat. Let me know that you are ready for today's session. Say ready, something like that in the chat. And this should be a great session. Welcome, Mountain Tactical. I see you in there. I see Neil, Kareshma. Awesome. Bob, Chris, Dana, George, Harry. This is going to be an awesome session. So I just want to give you guys a little context here. I'm going to go ahead and stop sharing. I'll get rid of this one screen I have going on here. And then I really just wanted to open up and give you guys some context of who Nick is, where he's coming from. And Nick's been trading for over 25 years. He's one of my mentors and the mentor in our options mentorship platform on Benzinga Pro. So my name's Jonathan Mallard. I've been with Benzinga for about 4.5 years now, and Nick has been trading for about 25 years. So lots of experience. You can see here, this is one of just a little screen grab we had from his trade picks, where his average return was about 31.8%. He had a 68% success rate, and that was just with stock picks. But you're going to learn a lot today where you don't have to have a huge account. You could just be working with a small account and still get a very consistent win rate just by using technical analysis that Nick will show us a little bit about, trading with a community, and we'll show you how to do that. And then it really comes down to structuring your trades well, because it makes a huge difference over the short term and the long term, depending on how you structure those trades. So without further ado, let's all give Nic Chahine a warm welcome here. Nick, good to see you, sir. Glad to have you here.
Hey, good to be here. I believe it or not, I was working just before I came here. So it's this weekend, just like any other weekend, it's work, which is fun. If it wasn't fun, I wouldn't do it. It's fruitful because I get messages. I literally just read a message from somebody and I was like, oh, I can't believe I have to type another word. And then I get a message from a new member. He says, I'm so glad I joined. And he's just been here 2 days. So it's like an adrenaline shot. Works better than the sodas I'm drinking right here. That's for sure.
Yeah, so, man. I'm ready. You're on Pacific time too. I was on your session this morning at 10 a.m. Eastern time, but that's 7 a.m. Pacific. So yeah. I definitely had some trades picked out this upcoming week.
So did I. Session. We went through a good list. There were a lot of stocks that were good, that were towards the bottom of a range, that are worthy of saying, okay, I see some support. Let's see if we can put it to work. So I have a lot of notes in that list, and I'm going to work off of it this week. I'm going to just do that and not sweat it and see, oh, what can I do? What can I do? There are plenty of stocks. You have to be careful because we still have so much uncertainty. And I'm not worried about the headlines from the headline perspective if they weren't so serious. So global war will stop all businesses. That's one. And it's not right here, but it's on the table. We don't know. Yeah. Also, the Fed is waging its own war on inflation, and they're in panic mode. I don't know. They must be missing a screw in their head. Last year, 3 months ago, oh, transitory. And now suddenly everybody's in a panic. And now we have the San Francisco Fed daily, I forgot her first name. She's joining Bullard and wanting half-point raises. So now suddenly everybody's panicked over that. Anyway, so you have to make room for the possibility of us being wrong. So we can't be all in.
Yeah.
and we have to like book profits quickly and book losses on bounces. We can touch up on all of this today. We'll go however we want to go. I forgot what we titled this one, so you kind of steer me.
Yeah, this one's actually one of my favorites. Is how to trade options on a budget for
Okay.
consistent wins. So a lot of
Perfect.
people that I
Perfect.
talk to come in. I mean, some people have, day trading accounts. It's all relative, right? What's a big account versus a small account? But I talk to
Perfect.
so many people where your strategies where you don't need thousands and thousands of dollars to make a trade, just a few $100 is enough. And then just some of those principles, some clear principles for trading that we can all learn from, and then maybe digging into some specific trading opportunities.
Sure, we did that. I focused on my trades of late to be small, meaning small mistakes. If the worst scenario came to fruition, the mistakes will be small in dollar terms. So clearly they won't be huge home runs, but they turned out to be pretty good winners. We will discuss them for different styles. Like one style is the buy and hold, one style is the buy the swing and hold, and my favorite style is where I need nothing. I just want time to pass and I win. So we will touch up on all of these.
And just so you know, in terms of the product, well, I'll stick around later on after Nic is done with his educational portion to talk about product stuff. But just so you know, Nic, this includes Benzinga Pro, so all those tools. It's the Inner Circle chat where you can trade live with Nic as much to your heart's desire, and then with all those swing trade picks that you give out as well.
Okay, so I'm going to do a good job at laying out what we do. This way you can assess while you're here with me whether this is worth for you to join the team or not. So I've been working with Benzinga for a long time, since 2011. I don't work for them, but I choose to work with them because they have been straight up an outfit that backs up its products, gives you money back if you don't like it. No need for a lemon law. You get in, you get out. It's no problem. So my services with Benzinga basically focus about learning. I'm in the process of teaching myself. I taught myself everything. I'm an engineer. I didn't learn this from anybody. I didn't come from Wall Street. I just broke them down into manageable, plain, simple English concepts. I don't need to know Greek in order to trade options, and that's like sacrilege apparently. But I can tell you that you two don't need them either, because they're plain, simple English, logical concept. They're contracts. There's a buyer, there's a seller, there are terms. You can do it. It's not that difficult. The charts are a little trickier, and that's the second layer of my services is I've gotten to be pretty damn good at charts, whether because I like geometry or math or whatever. I just like it. I look at a chart and I see things that people have a hard time seeing. For me, it's like second nature now. So other than my guidance as far as what to do with options, I offer the macroeconomic conditions. Like tonight, as soon as I get off here, I have to do a video for my readers and viewers that lays out the market strategy for the week. So we would know what to do. Let me share with you how that works. 3 weeks ago, the Fed was going to meet on Wednesday, and everybody was freaked out. How much will they cut? What will they raise? What will they say? All I was concerned about, how will the market react? And I said from Sunday, I sent out a video and my strategy was 10 minutes, 8 minutes. And I said, I want to be long out of Wednesday afternoon. That's what I literally said on Sunday. And you know what happened on Wednesday? Do you want me to share my screen?
Yeah, that would be great.
Okay, I'll show you what happened. So let me see here. I got a new monitor. I just need to know how I can share without breaking everything. Okay, there we go. I think this will work. Yes, you're seeing what I want you to see.
That's perfect.
Okay, so by the way, I bought a 49-inch monitor so I can better serve you on a day-to-day basis for the live streams. So anyway, let me pull up the SPY, hide all the lines and go to a one-day chart. Okay. This was Wednesday afternoon, the Wednesday I was talking about. And this is what happened. An 11% rally from the day I said I want to be long at, days before that. So when everybody was freaking out, I was short. My message was from Friday, before the weekend, I sent out that message. I said, I want to be short into Friday. I'll decide on Monday what I'll do. I'll decide Monday, Tuesday, I may be bearish, but then I want to be long Wednesday afternoon. And that's what I did. And that's what I shared. And then the rally was phenomenal out of the, and then we traded a whole bunch of things along the way. So the service is, first of all, what does the world look like and how we can trade it with some brains. Like I don't know what we're going to do this week. I'm going to go see what's on the docket, probably the Fed minutes. Ugh. Get off our to-do list already, Fed. And also maybe Tilray reports, maybe a couple of reports there. So we'll think about that. Secondly, we will talk about, I will also share every day before the market starts. I'll go into the chat room and I'll post my plan for the day. So if you're lost, if you're drinking coffee in the morning before the market opens, you'll know what I'm thinking. You'll have the charts. You'll have 5 charts for the day, the indices and the 2 futures contracts, and a table for the earnings. And then middle of the day, you will have another write-up that says, here's a trade setup with a full video and maybe a table on how to do it and several ways to do the trade. And usually the trade is not a lot of money. So it's not prohibitive for somebody with a smaller account. There's always one version of it that can work in a $2,000 account. So it's easier to make money with options when you have a bigger account, but that doesn't stop you from participating and learning. I mean, you can't get to a bigger account without learning the stuff. So whether you grow the account or do you bring money out after working your way up, doesn't matter. You need to learn the process first, and you can practice with one contract and learn it. And that doesn't require much capital. So that is the everyday. This repeats every day. Okay, so Sundays, I just got off, you were with me. Every Sunday morning, we have a webinar like this. I have a microphone, I'm sharing my platform. And in it, we will go over hundreds of stocks. No joke, this list has 125. I went through all of these this morning. In fact, I went through them last night because I sent the subscribers a form for them to tell me what stocks they want to look at. And look, we have Australian stocks, German stocks, US stocks, Chinese stocks, everything. Crypto, pot, everything. So all of these are linked. So they will have that sheet all week and they can just click on it and the chart will come up. The notes are in there too. So that happens every Sunday for 2 hours. I do the homework on Saturdays. So that's another 2 hours of my time. I tabulate them and I do a webinar and I record it and I share it. So there's plenty. And just when you think we're done, nope, there's another layer, which is probably the most exciting layer. I share my screen like this, live, every day, all day. Yep. I share 5 windows, I think, each with about 6 stocks in it. And we're tracking fast trades for those who know how to trade fast. So these are opportunities that come up, like, sorry about that, intraday. We see a swing this way and a swing that way. You're saying, I can't trade that fast. I promise you, if you can jump in for like 20 minutes, you will learn so much about charts in general, because everything that applies here on the daily chart, the super slow charts, apply at a 1-minute chart. And we even go to 30-second charts. I'm trying to remember what we did on Friday. Yes, we caught this. We caught this rally, and it was a huge win. And I think it was the second time we traded something big time on Friday. The day before that, I believe we caught the down. Oh, when was the day where the market just fell apart and they blamed JP Morgan for it? Whenever that happened last week, you know, It made the news. Oh my God, JP Morgan did one trade that broke the market. You know, last minute, the stock market fell apart. We were holding puts that day. So if I bought a put for 14 cents, so $14, it turned into $2 by the time the market closed. So 14 cents made me, so if I bought one, it was a $200 outcome out of a $14 investment if I just did one. So I didn't keep it until it got there. I more than doubled my money. Clearly not that. It was a, like, what is it? What do they call it? A 5-bagger, a 10-bagger.
Right.
If you held it, it was a 20-bagger. So where did you get out? I don't trade most of these because I'm too busy helping other people trade the stuff. Okay. So the session that's open all day is super exciting. Super exciting. So let's recap. The team gets a weekly strategy meeting, a weekly recap of all the stocks you want on demand. So over 120 tickers in the table for the whole week. You get daily morning write-ups to line up the day. You get middle of the day write-up with a trade setup complete. And then you get me all day if you want to reach me. So if you want to get in contact with Nic, you have every opportunity 24/7. So I won't instantaneously answer everything unless I'm logged on. But if I don't answer it, I guarantee you someone will try to jump in and help out. There are super users in there that just love to help out. And we don't have any jerks in there. We had one, we kicked him out. I don't know actually if we did. He was a troublemaker, but maybe I haven't heard of him in a while. So anyway, it's a good place to learn. It's a good place to ask questions. No one judges. You know how I know that? Because more and more people in the chat room are starting to share their trades. So they'll say, I'm buying calls, or I'm shorting this and I'm buying that. So when they're comfortable sharing, it means that the environment is not judgy. And they're not only sharing winners. I ask for people not to post wins unless they actually shared the entry point. This way, you know, hey, look at me, I made so much money. Well, yeah, why didn't you tell us about it?
Right,
so,
right.
So nobody does that
thanks
anymore.
a lot, bro.
yeah. So thanks for that. Yeah, yay you. So this is not happening anymore because it's just a chat room etiquette, nothing more, nothing less. All right, so that's what we do. Let's jump into some methods of what we do in there and what you can do on your own. Okay, so me sharing the screen, I like to start with the pro habits thing. I guess I can do a slideshow. Let's do a slideshow. We have it. Oh, maybe not. That blows up on my sharing. Okay, so I don't know how it looks like when it blows up that way, but it's a big monitor. So we'll go with this. I'll roll it. So what you want to develop professional-like habits. I don't want you to become, quit your job and do this. I want you to develop some habits that all professionals need to have. The one differentiating factor that's right off the bat between you, the home gamer, and somebody that does this professionally is that they have a method. Just like what you do at your job, you have a method. So doing this like a pro, you need a method. You don't walk in and say, hey, I'm going to wing my job today. Nope, you have a plan, whatever your job is. So with the method comes confidence because you've tested it and it works. So you repeat it as long as you have discipline. Discipline is super important, super important. All right, so moving on to risk. This is where all the trouble starts, really. People taking risk either too big or wrong. And let me explain the difference. So risk, really, I split it into two things in my head. One is how much can I lose? Everybody knows that. Okay, what's the worst case scenario? If I lose, how much is it going to cost me? Once I decide, okay, I'm okay with that total loss, then I take the risk and nothing more. I don't take a risk that makes me nauseous. That's too big. If I can't sleep, that's too big. And the second part, which is where people make the mistake, in two parts. One, the mistake of not putting on the right risk, and two, not managing the risk. So when somebody says I'm managing risk, yeah, I'm okay with how much I lose, that's not the part you manage. That's the part you decide on. The part you manage is the second part, which is what are my odds of winning and losing? That's the part you manage. Because this, you decide you're okay with the worst case. Otherwise, why take the risk? This is the part you manage. So if I took a trade and I assigned myself the odds of winning, hey, I have a 70% chance I could win. So if any time that later, 2 weeks later, I revisit that trade and it's no longer has that chance, I should probably not be in it. I should determine What's the exit? How low can it go before I say, you know what? It's a coin flip now. I don't know. Okay. So that's the part you manage. Risk management is here, not here. This is risk picking, choice. This is the management part down here, the odds. So if you start out with a trade that has a high odds of success, you're already halfway there. And that's really the quote secret of my method. I take trades that are very high odds in my favor, very low odds in the other side. The person that takes the other side of my trades needs a miracle to win. And they get it every once in a while, but the odds are in my favor. So statistics matter. That's why they are statistics. Okay, so there are no shortcuts. So leave very little to chance. So you got to do homework. Like I said, 2 hours every Sunday. I do it for you. You get their homework handed to you. I set alerts and I wait. I have 1 billion alerts every day. I've got like 20 alerts that go off because I do the homework. I set alerts when I'm doing the homework, and then I don't have to look at the charts. Boom, bing, bing, bing. The alerts go off. I go look with the notes. And then this is the most important one. I shouldn't do anything without a reason. So NTNT is a silly acronym, but it's a wake-up call. It says no trigger, no trade. So if I don't have a reason to take a trade, I shouldn't take it. And the T, it could be thesis, no trade. So you can say that you can't say, I thought it was going to go up. That's not a thesis, that's hope. A thesis is like, I thought it was going to go up because they're going to release a new product and not many people know about it. Okay, so that's a thesis. Or I thought it was falling into support because of the bounce on the last 2 weeks. Therefore, I took a long. That's a good thesis because then you know when to get out. If you lose the support, you should be out. That was the whole basis of the reason why you took the long. If it goes away, you should be out. So then you manage your odds. Okay. And you should stop out, and you should book your profits sooner than later. Here, don't overstay your welcome in winning trades. You're not guaranteed they're going to last. And if you get losses, stop out. So you need to have an exit strategy as soon as you take the trade. If things go great, I get out here. If things stink, I get out there. So you should have a plan of action, at least an idea. So there are some few other do's and don'ts that they probably repeat the same thing. Have balance. I'll give you an example a little bit later. Like if I'm long everything, I'm making a mistake. If I'm long everything that looks the same, I'm making a huge mistake. For example, if I was long PayPal, Affirm, Clover, IWM, ARK-K, ARK-F, I'm long the same stock. That's horrible. That means my portfolio got blown out in the last 6 months or 8 months. So if I was long these, long oil, long gold, short bonds, okay, so now I have balance. If I'm short the indices and long some stocks, okay. If I'm long some cyclicals and I'm short some tech and long some IWM, okay, have balance. And spread the risk. What does that mean? If you know options and you take all your positions, all expiring in 1 month, everything goes bad together. If you have a bad month, everything goes bad. Why not take some for this month, one for next month, one for next month? Everybody's so consumed by, oh, I want fast trades. So I take this week's contracts. God, knock the microphone one more time, Nick. So if I take this week's contracts, the good part is that I get results fast. The bad part is if something goes wrong, maximum loss immediately. It's hard to recover. So I prefer some time on the clock because I don't mind. Then it gives me time to react. At least spread them. Don't make 2 or 3 or 4 bets in the same week. Okay. And so that is important. And here's one that most people hear, very few people actually believe in it. I don't know one professional trader that actually averages down. They all think it's idiotic. Averaging down is basically saying, uh-oh, I have a problem on my hand. Let me double it. That's what you're doing. You're averaging down. You've got a problem, you're doubling it. You didn't get rid of it, you made it twice as big. It just doesn't make sense. So to avoid that, average in. You see that part here? Average in. Big difference. I'll give you an example. Let's say you decide to go long Roku this week and you take all the position at once. Now, what do you leave for? You leave no room to add later. So what you do is you take partial position, and then if it drops more, you add the rest. So now you averaged in to the full size position you meant to take in the beginning. But what if it starts rallying? So what? What if it does? You're long already. I'm not long enough. Then add the rest. If you have new information that says, that's it, we're done, add the rest. What's the big deal? So I did this with crypto. Yes, we do look at crypto. I did a video months ago. I said crypto is going to correct because Bitcoin is going to correct. And I will get long crypto when Bitcoin hits 33,000. And it hit 33,000. And I got long crypto. I'll give you an example. I got long Solana, which is a coin that competes with Ethereum. I bought it. I think the last batch I bought was $78 or $79. I think last week it was 140. So it doubled. I didn't buy a whole lot. I bought 1/3 of my lot, as I said I would. Am I upset? Nope. I just doubled my money. I could have made more, but that was my plan. Buy 1/3 and see if it drops a lot lower, add the other third. And then if it goes a lot lower, add the last batch. That may still happen. My plan hasn't been foiled. It's just been delayed a little bit with this latest bounce last week. So did I book some? I had already booked some. This was the plan that I wanted to accumulate for a while. So I planned to average in. It bounced against me. Well, is it? It bounced. I'm already long. I doubled my money, but I'm not fully engaged. I'm not upset one bit. I would have been upset had I bought it and it dropped by half. And then I'm stuck. Now I have to increase my risk in order to do that. Okay, so whenever I have a trade that goes against me, here's the part that people fall prey to. They're crippled. They don't know what to do with it. They get stuck. They get mentally, they can't do anything. Oh my God, I'm down 90%. Why are you still in it? You're down 90%. It's almost too late to do anything. So if you redefine the trade as soon as it gets hostile, so whenever a trade suddenly becomes a worry, now it's no longer the point to make money. It's to get out with minimal damage. So if you redefine it in your head, I'm just trying to recover to even. Thursday or Friday, can't remember. Somebody was, I think Thursday into Friday. Anyway, somebody was long calls in Amazon. And then Amazon fell out of bed and they were down 50% of their money. And if you trade Amazon, their options are big. So the person was down thousands. I think it was 5,000 overnight. And then we opened up and Amazon was down. And he said, what do I do? I was like, okay, so you're coming to me too late. You clearly weren't qualified to do the maneuver you were trying to do. But here's what we can do. I told him, as soon as you get a bounce, which I thought was coming, I said, I would wait out a few minutes, see if the bounce comes. And when it comes, I would get out anywhere near even if you feel like it's going to go much higher, because I'm going to sit back, put my arms over here, because it is, that's the right thing to do. In hindsight, it may not be perfect because Amazon may continue on higher, but that's the right thing to do. Sure enough, it bounced and it gave him an exit point that was about even, and he did get out. Kudos for him. And I think Amazon went a little bit further. However, he did engage with the SPY with a trade I did that day, and it made him a lot of money. So he said, at the end of the day, he came back to me. I think I took a picture of what he said. He said, thank you for helping me with this. I went from a loss into a win with that overall for the day, which is another thing, is he didn't get hung up on the fact that he lost on this one trade. He knew he was managing a portfolio, and the end result was a positive day when it was absolute crap in the morning. So I'm trying to see here. Oh, there it is. Okay. Let me see here if I can bring it in. 1 second. This is a snapshot from the chat room, by the way. I'm going to block out his name so we don't out him. Here, I'm going to just paste it right here. Okay, so this is it. This is what the room looks like. They're looking at my screen. This is everybody. That's at that time, 228 people there. Personal thanks again, Nick. You saved me from my Amazon in the morning and covered my most of loss spy. Anyway, the gist of it is that he turned a bad situation to a good one just because he was in the room and he had help. We have 200 people that could have opined on it. So everybody is having fun and everybody has a good opportunity to profit. And I don't have to prove anything to anyone because I have 250 witnesses on most days. But he did the right thing, which is the part where he didn't hope. He got a bailout. He took it because he redefined the trade as, hey, that's a crap trade going against me. It's hostile. I need to get out of it and get away with my life, basically. So he did that. All right. So we covered the easy part, which is, but really important things. If you were to retain only one thing out of this, is this part. Don't take any trade without a specific reason. If you can't tell me why you took the trade, you shouldn't take it. If you're not able to borrow money from a dear family member to take the trade, maybe you don't have enough conviction. Like I always picture my poor mom. She's 90 in Lebanon, and I could not tell her unless I really believe in the trade that, hey, let me take some of your money and put it in this trade. If I can't do that, maybe that trade is not worth my money either. So keep that in mind. All right, so these are the methods or the philosophies behind successful investing. Now, it doesn't matter how you do it. This is a necessary part, okay? So what about the methods that we employ? I'll give you an idea. So I'll go back to the chart. You've heard of a stock named SoFi. Okay, so it was under pressure for a long time and it was not getting any love. Let's go to a daily. You can see it's been selling off for a long time. And I think it's misunderstood. So I did my homework and I believe in the business. So I think that day right there, I did a video and I said, I'm long SoFi and NEO. Those are two long ideas that I can subscribe to today. I said, for SoFi, I just want to buy a $7.50 call out to May or June. I think it was $150, maybe $200 a call. I can't remember. And I just want to hold it because I believe in the business and I think Wall Street has it wrong. And in fact, if you go into TradingView and you click on its fundamentals, the math is wrong. Like, where is that column in 2020? And then I go to Yahoo Finance, it's got a full-blown P&L. So it's like, it's definitely misunderstood for some reason. So I took calls. Clearly, I about doubled my money. I booked a little bit, but I left it untouched, just pure calls. Doesn't need fancy talk, pure calls. I did the same thing with NEO. I'll tell you why I'm mentioning NEO. So I shared the video, same video. It had SoFi, NEO, and a TLT, which was a complicated thing I won't talk about. But for NEO, I said, on paper, it's a buy the dip moment. It was that day. Buy the dip moment, but you have to have a good, strong stomach for the risk that comes from delisting. This was like a delisting scare. It was a legitimate risk. I said, if you can stomach that risk, it's also a good, just buy a call and hope. And look at what they did. Boing, NEO took off, SoFi took off like the very next day. Clearly winning trades. I'm not looking to swing for the fences like this every time, but when it comes, I would love to take it, right? So then somebody said, well, what about NEO now? What can I do? So I said, all right, so let's trade NEO in a different way. Days after, and recently, I can't remember when. So I did NEO this way. Let me show you here. Okay, so what I decided to do with NEO is to sell a put spread. Let me see if I go down to 120, maybe I'll see it. I said there is support. The easy part of the rally is done. The easy part is done, but now we've developed support. So how can I leverage that? So I did this box. This box, if you don't know options, it's basically an options trade that does not require a rally to win. In fact, it leaves room for the stock to fall to it, and it would still win. So it's called a credit put spread or a bull put spread. It sounds complicated, but I can demystify it in a little bit. It's just basically two options, legs, they call them, two options, contracts in the transaction. I sell one and I buy one. I collect money for it. And the trade wasn't that capital intensive. An account with 5,000, 2,000 could have taken it. Depends on how big they want the trade to be. And what it does, it delivers about, I can't remember, 12%, 13, 14% yield on risk. So let's say the trade required you to have $500 in your account. So the equivalent trade would have been for you to buy $500 worth of stocks somewhere and get a 12% rally to deliver what this one delivered. Except this one, no money leaves your account, money goes into your account, and they reserve $500 worth of potential loss. They reserve it. They don't take it. They just say, well, you can't use that 500. You had 2,000, now you only have 1,500 to work with. That 2,000 we're going to reserve for this trade. And then I don't need a rally. So I get paid immediately and I wait. If the price doesn't crash, the money is mine. If it crashes, I may end up with a situation. And the maximum loss is the 500 minus what I collected. So same as with buying shares. Of course, time is an element, and choosing the right level is important. It's not that easy. That's why not everybody does it. So I also said that there would be upside potential. And I said I would exit in here in my video. I was very plain about it. Now I can tell you that if NIO takes out 24, it can go to the 30s pretty quickly. So it'll finish that green thing, right? This green thing will continue. I made my money though, twice. I suggested I buy the call. I suggested I sell the put spread. They both worked out great. I can try to chase it again, or I will find another opportunity just like it. These are opportunities that are brewing to different degrees. So I keep putting them in here and I share them with people. I may work one or two of these this week. I don't know. So that's the kind of trades. So let me see if I can show you the actual trade. Okay. So this was like an education piece. NIO reported earnings late March. And I was trying to explain to them what to do on earnings. Let me show you a little trick with earnings. So these are old contracts. This one expired on Friday. This was the one before that. So they reported earnings inside that contract, which is this. And this was last week's, but that was like a couple of weeks ago. You can see this was Friday the 24th, and this was expired on the same day I was showing those two. Okay, so you can see that column right here. Now that we've switched onto an options lesson, this column right here is called option implied volatility. So this is, you've heard of the VIX. This is basically the idea of the VIX. How nervous are people about this contract? For one day, this contract had one day. It was 230. That's pretty high. The lower, the better. I'll give you an idea. That's 10 times higher than Apple on any given day. That's which means it's an iffy situation. That's why the market makers are pricing everything so expensive. Meanwhile, 8 days later contract is about 100 points lower, less risky. So what do? You don't buy anything here. If somebody wanted to guess the outcome of the earnings, they shouldn't buy anything in the one that has 1 day life. You're overpaying almost double. So the next day when the market opens, as soon as the market opens, you're going to lose half your money immediately just from the open. Forget the move up or down. I guessed right. Forget it. Half the premium you paid is gone just because you bought it 1 day before the event and now there is no event. That mystery is gone. So is the 100 points that you had extra. So you're going to lose half your money. So the trick is to buy something out in time and sell something in this one. So this way, the next day, this one will die quickly and you'll end up holding that one. Anyway, little trick. So we do stuff like this all the time. I don't remember what that was about. Oh, this was to show you the differential in the implied volatility. The same concept. Look, this is the implied volatility. The dashed line is the normal, and this one is because of the earnings. Look at the difference. Usually people are this nervous about it. Not on earnings. All this is extra for the market maker. The suckers, the Wall Street suckers everybody out of their money. And that's how they do it, by making people chase ghosts. Okay, so we did that. Let's talk. Where do you want to go, guys? Give me some heads up. Are there any questions? Is there anything you want to pitch in here before I continue talking like a talking head?
Well, I just want to point out for the beginners that you don't have to know all this stuff up front.
Oh, no.
That's why trading with a community, trading with a mentor like Nic is so helpful. And yeah, you might have to put a little bit more work into it. Like, you do have to do homework, but we have everything right here, like with all these videos. What are options and puts? What's a credit put spread? How do you exit a credit put spread? And you have access to Nic on a day-to-day basis to do that. So that way you're not doing some YOLO trade that's gonna most likely lose most of its value. Instead, you can be more measured and have more like a 85 to 90% win rate if you choose your contracts correctly, and Nic can really help you to do that. And so that goes into Mountain Tactical's question here. Can you explain Delta? Going back to
that, I will do that.
Cool. And the reason I'm asking, the reason I love that question is we're talking about your risk and probability, and how we can literally choose the probability. That's what's amazing. We can say, like, if I was just buying a stock, I mean, yes, I can read charts and stuff, but it's not like a number. On these charts, the delta actually gives us a number that we can use, and that's what I love about it.
Yeah. So good question there. So let's go there. Let me go there, and I will explain it. So let's go there. Is this a complete table? No, I'll bring in a new table, and let's move this out of the way, and we use it as a scratch pad. How about that? Look at that. Whee. All right. Who do we want to choose? Apple? Let's use Apple. Why not? Yeah. I'll bring it over to here. 1 second. 16. Okay. New. And there we go. So this is a platform from E-Trade. It's my practice platform. It's good for demonstration purposes. I don't like it very much. Make your own decisions. They all suck at some point. This one has a lot of bugs. They should be embarrassed, as many bugs as it has. Okay, so let's just do a quick walkthrough in all of this. Okay, annotate. I think I can get a pen out of here. Draw, pen, that's good. Yay. All right. So this is what they call an options chain. You have calls and puts, and I'll explain that. Don't get bogged down. And this is for one stock in particular called Apple. So they call this the underlying, fancy Wall Street term. Okay. So I mentioned earlier that options are contracts, and I promise you I won't use Greek terms in order to define it. And like every contract, they have terms. So let's start with the easiest term of all, time. So I chose May for no particular reason. Look at all the other contracts. There's one that expires Friday, 2 weeks from now, 1 week after that, 1 week, 1 week, 1 week, May, June, July, August. You can go to January, and you can even go out to 2024. If you go out in time out there, they call them leaps. You may have heard the term. Those are not magical things, the leaps. They just like to give them a fancy term. Again, Wall Street trying to pull fast ones on us. So first term is time. They call it theta. The theta burn, just time ticking. Okay, so the anything here is on the same clock, as long as I'm staying on this one contract. Okay, that's one term. The second term is price, and you have that here. You can choose at what price to buy a contract or sell a contract. You can choose the contract price. That's the second term. Okay, and how many? the count, the quantity. Well, every contract here, like most options, every contract is 100 shares. They represent 100 shares. So if you buy it or sell it, you're striking a deal for the other side for 100 shares. Whatever ends up happening, it's for 100 shares. So if I do one contract, the consequence is 100 shares, whatever the consequence ends up being. Okay, so another thing that people get wrong is what's a put, what's a call? A put is bearish and a call is bullish. No, both are both. And in fact, there's only one situation where a put is bearish, and one situation where the call is bearish as well. A put can be bullish and a call can be bearish. Okay, so forget that. Don't think, oh, call's bullish. No. Also, there's another term, which is the delta, and that's the odds maker. And it's pretty easy to explain. Let me use it from let's go with the calls. So you can notice that it goes from 0 to close to a 1, close to 0 to close to a 1, right? There's one on the put side, also goes from close to 0 to close to a 1 with a minus sign. Ignore the minus sign. Okay, so if you want to look up the definition of the delta, be my guest. It'll be something like the amount of money the contract price moves with the $1 move of the underlying. Yeah, good luck trying to put that to work on your own. Let me tell you how I use it. So current price at the time on Friday was 175. Let's call it 175. The delta around 175 is what? 0.5. What else is 0.5? The delta on the put side. What else is 0.5? Are there any gamblers in here? It's 50-50. That's a coin flip. No joke. So if I buy or sell a call or a put at current price, the buyer and the seller have equal opportunity. They're at equal footing because price is here, right now. Anything above it or anything below it can happen. It's got 50-50 odds. So check it out. If I go up, let me walk you through the extreme. What is this number saying? Is this a big number or a small number? I bet you all said small. 0.03. It's not 0.3, it's 0.03. So it's 3%-ish, right? So this one literally saying there is very little chance, that is very little, right? Very little chance that Apple will be at $200 in 47 days, $210. This is what it says. The odds of Apple being at $210, tiny. That's literally what it says, right? Better odds here at 190, but it's still small. It's right here now, so it's 50-50. About 28% chance it'll be at 185. You see what I mean? The higher I go, the more opium I'm smoking. There's very little chance it will be here, but boy, will that be a big win. That's why it's dirt cheap. That's why it's only 20 cents to buy. There is very little chance. That's a lottery ticket. These two are lottery tickets. Actually, lottery ticket is a small price for an impossible situation. So that's what it means to have a low delta. So whenever I said manage your risk, let's say you were realistic and you bought this call, this one at 180. I'll tell you what it means in a second. And then time ticks and price falls, or time ticks and price doesn't rally, and this delta drops to 20. Suddenly now your odds went from 38% to 20%, roughly. Then you can decide, oh, that's too low for my taste, I should get out. That's how you manage the odds with that delta. So let's go on the put side and do the same thing. Okay, so there's a 50-50 chance that Apple can be at 175 because it is right here. All right, so let's take the extreme. There is a very small chance that Apple will be at 135 in 47 days. Very small chance it'll be here in 47 days. That's why it's 45 cents. Interesting to note that it's twice the price of this one. So that tells you the market makers are poised down. Like the market is more nervous about this scenario than that scenario. Bearish sign. Doesn't mean we're falling. It just means how they're positioned. Well, maybe we'll blindside all of them and re-rally. So that's just an interesting comment there. Okay. So hopefully we got the idea. The delta is the odds maker. If price is here and I'm picking this delta, the buyer and the seller are equal footing. You don't have an advantage. My trades, when I use my trades, I sell risk down here in these deltas, because then I have the statistical advantage. If I sell risk down here, in order for me to win, I need price not to come down here. So if I sell this put combination, the buyer of this put needs a crash for them to make money. And all I need is to Apple stay above 155 in 47 days. That's all I need. So these are my structured trades. This way, I'm not buying anything. I'm not hoping for a rally. I don't need anything. I did, so I'm not always long. I'll give you an idea. I did a trade in gold where I sold a call spread. Let's get out of this mode, clear everything, clear all drawing. Look at me go. Wow. Okay, so in GLD, okay. So on the rally with gold, I said, I want to short gold comfortably. I don't take stupid risks. And I did this trade and I shared it. I said, I want to sell risk up here. So what I did is I sold a call spread up here. I'll explain a little bit more a little bit later. And I needed gold not to do whoop all the way up there for me to win. I also said that somebody can buy a put spread down here to profit from the drop. If somebody did this, they won. If somebody did that, they won. If somebody did both, they really won. I only did this. And then when gold fell, I said, I didn't hate gold. I just hated the rally. So I said, it's days later, I said, it's time to take the opposite position. And I did this one, which is a credit put spread, the bull put spread, which is a bullish position that doesn't need a rally. So I shorted it up here and I didn't need a drop. I went long down here and I didn't need a rally. And they both played out. I did the same exact strategy with Lockheed, a company I rarely trade. When it spiked on War Talk, I said, I'm going to short it because it has resistance. And I sold a bear call spread up there, credit call spread, bear call spread. And I said, there's resistance. And look how it failed into my resistance. I drew the box before the price action. And then I said, I can short it by not needing anything to win, by selling a call spread, taking a bear call spread. Or you could buy a debit put spread, which needs a drop to win. So if somebody did this one or that one, they made money. If somebody did both, and they could have, they made a lot of money. I, again, only sold the top one because I didn't want to spend anything. I just wanted time to tick and do the work for me. And these trades needed $400 worth of account size to put to work, roughly. The minimum was about $400. If somebody had a big account, they could have taken 10 times and needed 4,000, but it would have made 10 times the money. So the trade works in a small account. And if somebody is gutsy enough to make a bigger bet in a bigger account, they could have done the same thing. Again, I said, I don't hate the company. I hated the price action. So I went long on the dip. I kid you not, on that day. The next day, boing. So profits here, profits there. Let time do the rest. So these are the kind of trades I like to do. Now I can go back and explain them, but I'm going to pause right here to see if there are any consequent questions to what we covered already. So if you want to let me know, I have not been tracking the chat, so you can help me out with that.
Yeah, anyone who has questions, please throw those into the chat here. But like the main takeaway here is, the topic here was how to trade options on a budget. If you have $1,000 in your account, you can trade these options, this style of trading. And in terms of probability, you're looking at those boxes on the screen that Nic just showed us. And all that you need to be concerned with really is that when you're selling those spreads, the price has to stay above the bottom box or below the top box. if you're selling the correct me if I'm wrong, of course, Nic.
I'm going to share something else, so you might lose my screen for a little bit. I'm hoping to share my this one.
And then Raj was asking, are we doing just call spreads and put spreads, Raj, Nick does a lot of other types of trades. We're just kind of starting with the basics since a lot of people here are kind of starting at the beginning.
Yeah, what I was covering the type of trades that could have worked in any size account. So I just mentioned, I mean, I'm a little confused at the question because I mentioned a call spread and a put spread. Okay, so let me back up. And again, this is that same platform you guys were looking at. This is my practice trading account. So let's walk through the definition of a put for fun. So what is a put and how can we put it to good use? So let me ask you this. I bet if I asked everybody here, hey, would you like to get paid for the opportunity to own Apple at 150? Currently, it's 174. Would you like to get paid to own it there? If the answer is yes, I can tell you that there's somebody that will pay you $130 right now if you buy 100 of their shares. So let me define a put. What is a put? All these are puts, different prices. 47 days on the clock. Let's say I'm traveling and I can't pay attention to the market. I've been long Apple forever. I just want to buy some insurance. I want to know that if Apple goes to $100, I want to know that I can lock my profits at 150. So what I would do if I own, by the way, I don't need to own shares to buy any options. That's a myth. So I would buy one put and that covers my 100 shares. So what that means is for the next 47 days, somebody promised me that they would buy my shares at 150, and that only cost me $130 because one contract is 100 shares, and it's $1.30, the premium. So 100 times $1.30, that's $130. Okay, so that's the buyer. So who sells it? Me. If you were nervous about your shares, and I'm dying to own Apple, and I'm saying to myself, I wish I bought Apple at 150. Well, I may get my wish. Somebody's willing to sell me their shares, and they'll pay me for it. What? So I go and sell the puts. But now I'm on the hook. I'm obligated to buy the shares at 150. In fact, I may wake up at any point in time between now and 45 days having 100 shares in my account. That's called being put to stock or getting assigned. Okay, not the end of the world, because I won't start losing money until $1.30 lower. So my break-even point is 148.70 because I collected $1.30 up front and I keep the money when I get assigned. Okay, so the put position will show up in my account as a liability because I promised somebody I would buy their shares, and it will show a credit of 130, and the credit may fluctuate in value. The amount of it that will tell me, oh, you're down because you only collected 130 and now it's 300. Now, who cares? I want the shares. So when they assign me, whatever that position is showing, whoop, goes away like it was not there. I keep the cash and I have shares like I said I would. So my break even is $130 below the 150 cost. So it's that simple. So the explanation of the put from the perspective of the buyer is buying insurance because they own the right to sell their shares at any point in time between now and the time of the expiration of the contract. In this case, it's 47 days. The seller of the put is also bullish. So you're saying it's a bearish position. It's not. I'm selling the put because I like the stock. In fact, I like it so much, I'd like to buy it. The buyer, the owner of the stock, likes it so much, they're willing to pay money to hang on to it. Otherwise, if they hated it, they would sell the stock. So neither of us are bearish Apple. We just want peace of mind. So which position is bearish when I use a put? If I buy a put in Apple and I do not own shares, the only way I can make money is if price falls. Because if it doesn't, every minute that time goes by, this thing loses value. Depends on how the price moves. So if price doesn't collapse through the put I bought, I'm not going to make any money. But let's say I bought it and the next day Apple crashed, I'll make a lot of money because that 130 will turn into 500, 300, 700, 2100. I don't know how far is it going to go. Not likely. According to this platform, I'll give you a minute. Can you tell me the odds of that happening? Are they high or low? Think about it. I'll tell you the answer in a second. I'm going to put the mouse over a column that matters. So the odds are about 10%. So low. So if I'm buying this to bet on a drop in Apple, I'm almost wasting my money. I would rather buy this one for a lot more money. At least I have better odds. Down here, it's not likely to happen, but it is a strategy if somebody wants to short Apple safely. Okay, so only buying a put without owning shares is a negative or a bearish action using puts. The rest are bullish. If I buy put for protection, I'm bullish. Otherwise, I would get rid of my shares. If I sell a put naked to own shares, I want to own the shares. How could I not like them? Only one scenario where I'm buying a put, I don't own shares, I just want to short the stock price action. So that is the put side. Let's define the calls. And what are calls? They're basically, let's say you don't own Apple, you would like to own Apple, you think it's going to rally in a couple of months, but dang it, you're so afraid of the Ukraine scenario and the Federal Reserve actions that you want to not risk that kind of money. I don't blame you. So what can you do? Instead of spending 100 times $175, that's a pile of cash. You can spend $600 to lock your price. Let's say you think it's going to go to 200, then you can spend $400 to lock your price. Let's see how that works. If I go out and buy a $400 call, this is the $180 call for Apple, and it's got 47 days on the clock, and it costs $4.10. But if I do one, remember contracts are for 100 shares each, so it'll be $410. That is the maximum money that I could lose. It's out of my pocket, but in return, I lock my price at 180. So regardless of what happens, if Apple rallies to 210, I'm in at 180. I paid my premium. Some poor schlep sold me this, and he or she is on the hook to get me 100 shares. I don't care where they get them. They owe me 100 shares. They don't have the choice. If I call my broker, me, the person who bought it, call my broker and say, hey, I own give me my shares. And they will exercise that other person, and that other person will become short the stock at that price. Hopefully they own shares. Otherwise, they're screwed. That's how you get short squeezes. Don't ever sell a call. I forbid you, naked. Because if you don't own shares and you sell a call, let's say you did it in GME, you went bankrupt. Most recently, you went bankrupt. Or Tilray, I don't know, 5 years ago, you went bankrupt because they super spiked and you can't cover. You're short at whatever number and the stock went 500-600% up, you're bankrupt. You can't cover your short. They will liquidate your entire account and close it down because you now owed them so much money, because you have to deliver shares at that high number. So if you sold one, you have to deliver 100 shares times whatever that high number was. And if you don't have that kind of money in your account, they'll sell everything you have to cover the loss and send you a bill for the rest. So don't ever sell a call naked. I don't know why they let people do it, but they do. Covered calls, I'm okay with, as long as you know what you're doing, because the maximum risk is, hey, take my shares. You don't have to go chase the shares at whatever price. You're in already. Okay, so that's the definition of a call. It's basically locking my price in if I wanted to own shares without having to take a pile of money right now to buy this. So it gets me long Apple right away. What if I don't intend on buying shares? That's fine. If I paid $400 for it and then the price rises, this 400 can turn into 600, 900, 1200, 2000. You know, that happens in Tesla over in the same day. You pay something, you pay 50 cents for something and suddenly it's $400. So that's what I said earlier. We bought a put for 14 cents and it turned into $2. So we did buy a put for 14 cents. And at the end of the day, when the market closed in the money $2. So the win was $2 minus 14 cents times 100 per contract. So it was a pile of money. That's what I'm saying. It doesn't always work like that. That's why people start buying here and buying there and buying here and buying there. Before they know it, their account is down to zero. What happened to my money? Well, you've been buying left and right. It just goes away. That's why I prefer selling stuff. It's not as exciting. It's boring stuff, but boring is beautiful. So let me walk you through the credit put spread that I just mentioned. Okay. I'll still use the same example since you're now have gotten familiar with the visual of it. So the spread involves literally two things because you're spreading your risk. I buy a put and I sell a put, and the combination is called a spread. I can do it this way or that way. What's the difference? This one is a credit spread. This one is a debit spread, and I'll explain. I like to do credit spreads. So for a credit spread, I'm selling a put. So I'm on the hook. We've already covered that. Now I must buy somebody's shares. I'm on the hook from 150. But then I turn around and do the opposite, lower, and I give back some money. So then I collect the credit, but not as big as I would have been, because now I'm paying back 93 cents. So, but here's the advantage. So now I'm on the hook, I'm off the hook. So if Apple goes to 100, my maximum loss is set. I can sleep well knowing I can only lose $400 or whatever it is. So that is a credit put spread. This is a position that is bullish. What do I need to win? Nothing. I just need time to tick and Apple not crash. So which is easier, picking where a stock is going to go and buy a call there so I can make money, or finding all the other places where stock is not going to go and sell some risk there? It's all the other places where it's not going to go. Find a place that you like and sell risk there. So in this case, I just need Apple not to go whoosh. By the way, this is not a trade alert, so don't go out there and do this particular trade. There are some things, there's some reason why I wouldn't do it. Mainly is because there's an earnings report somewhere in the middle, and I don't want that drama. But this is the visual of a credit put spread. Okay, so this is a bullish position, even though it is it does not need a rally to win. If a rally comes, great, I make my money. If a rally doesn't come, great, I make my money. If it falls a little bit, great, I make my money. If it falls a lot of it, okay, maybe I will have to manage my risk accordingly. I can still make my money. If the stock crashes through 140, okay, I'm going to lose some money. One scenario that can actually blow me out versus me buying shares and only a rally could make me money, or me buying calls and only a rally can make me money. So I prefer these boring things. And the yield, I usually aim to 12% to 20%. I don't want more. Have you ever met an easy 20% rally? I mean, win? No, they come with drama. Trust me. If you keep the yield low, below 20%, the odds are in your favor when you're selling spreads. That's the magic. Think like a market maker. Okay, so that is a credit put spread. So let me show you a credit call spread. Earlier, I told you I did this in Lockheed, right? Okay, so this is a call spread. It's got two legs. This is a put spread. It has two legs. This is called a credit because I'm selling 131, I'm collecting 93. So the net is a credit. I'm selling more than I'm buying. This is a credit because I'm selling more than I'm buying. So I'm short at 195. You just told us not to short, yes, but I'm also long at 200. So if it goes to 1 million, like GME did, I stop losing at 200. So I have protection on both ends. Okay, so this is, in fact, if you do these two things together, a credit put spread and a credit call spread like this would be called an iron condor. You may have heard the term, fancy term, because I don't know why it's called that. Maybe it was the ancient Egyptians that came up with that name. I'm not sure, but it is this the visual. You take a bullish position that does not need a drop, a rally, and a bearish position that does not need a drop. So all you need is just time and price to stay below 195, above 150. How easy is that? Better than the chase. What did Apple do today? Who cares? It's away from my price. That's all I want to know. My mother literally asked me this morning. I called her. She's in Lebanon. And she said, how's business? The market, I hear, is like, I don't care. I'm doing fine. So I really don't need anything to happen. I want nothing to happen and I'm fine. Okay. So that's the advantage of selling. You just sell and wait for time to kill. Now, it's important that you do this at the proper time. What does that mean? You can't do it without knowing charts well. Then you get into trouble. For example, the charting situation here is pretty ugly. So let's see here, Upstart. I don't use this for charts at all. Horrible charts. I'm trying to see here. Let's save this and go to 1 year, I guess. Okay. So by the way, I sent out a go long Upstart in July of last year, and then it did this. And then all along the way down, I mentioned this because that's part of the lesson here. At every step of the way, is it time to go long? 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 No, 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 no. And I finally went long when it came back to the same entry price I did before. And the next day it went up 17 or 18%. And next 2 days, it went up 25% total. And then it fell down again and went lower. I did a long position recently, and it also won. So we've had 3 wins in Upstart, and none of which they all had a credit put spread element where I didn't need a rally to win. But the first one actually had a call as well. So whoever did the call made a lot of money. But here's why I mentioned it. Whoops. So somewhere around here, somebody thought, hey, I want to do a credit put spread. It just fell 30%. And I said, I wouldn't touch it. It fell 30%, but it's still up 1,000% from just a couple of weeks ago, and I can't explain it. So I wouldn't touch it. So somebody said, if somebody did a credit put spread here, even if they structured it properly, they lost their shirt because it was too high. So you can't just chase. I like to do credit put spreads when a stock has fallen into support. For example, Etsy. Great P&L, can't stop falling, finally stabilized. So if somebody wants to do a credit put spread down here, which means a bullish position that does not need a rally, okay, I get it. But to chase up here and do a credit put spread at this level, that wasn't good. And that also works on Roku and a whole bunch of stocks that have been falling like this. So timing is everything. You have to marry your knowledge of stocks and pure logic with your knowledge of options. So they're not foolproof. I don't want to give you the impression they're easy. If they were, everybody can do them. But they're very exciting. So I have a new person that keeps at me, Nick, I need an iron condor. I need an iron condor. I was like, where's the rush? Thursday, he needs one for Friday. Friday comes, I need one for Monday. I'm like, I wouldn't do one for Monday. Why not? Then I need it for Wednesday. It's like an avarice. It's like, I need one. Hopefully he doesn't fall into a trap one day. So far, they've all worked out, and these are fast trades. They're short term if somebody can stomach the action. But the concept is a balanced book. So we can also use options to make an equity only strategy work. I know a lot of you don't do options. I have a lot of members that don't do options. They are strictly buy stocks and sell stocks. So I have some futures only traders. I have some avid crypto traders, and we're dabbling into everything. But the concept of the proper management of risk is the same. What you do, when you do it, when you do your thing is the same. How you do it is what differs. If somebody just does equity only, they're somewhat limited, but the same concept applies. You can't be chasing unless you're a momentum trader, and you can't be doubling down. You can't do this and you can't do that. But if you add the element of options to your equity trades, it's fantastic. Just ask Jason Raznick. So he was in one of those presentations one day, and he said, so what do I do with my Tesla? And I told him I would sell covered calls all day, every day. And he did. And from that conversation, he came back another day and said, boy, I just made, I forget the number, $2,400, $2,700 in a week out of me owning shares in Tesla, because he owned shares and he could have just sell calls against them. So there is plenty to be done. I did it with Robinhood. I got assigned shares because I sold the put spread, and I thought I closed all. Apparently I had a few contracts that weren't closed, and I woke up owning shares. And recently Robinhood went through the roof, right? Because they announced blah, 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 whatever. Don't fall for news, please. Okay. And I said, you know what? I better put those things to work. And I immediately sold calls into the spike. Didn't it just spike? Yeah, this one, like 25, 30%. So I said, I'm selling calls. And I did. I sold calls at 18.5. So somebody paid me, I don't know, $500. Thank you. And then all I had to do is sell them my shares at 18.5. And I didn't even need to do that. But I wish they had taken them, but they didn't. So I got their $500. So that's one way to use shares and selling covered calls against my shares. So if you own shares in any other stock, we can see if there's an opportunity to sell covered calls. Not everybody should. And no one should do it without talking to somebody who knows what they're doing with options to begin with. So it's not as easy as one thinks. So this is like the big picture as to what we do. Positions that don't require a lot of capital. And by the way, you can modify these to suit people's taste in risk and timing and style. For example, if somebody can own a stock of whatever the tickers they're dealing with, then they can afford to sell a naked put, which sounds scary, but it's safer than buying shares. I'll give you an example. Let's pick a stock. Give me a stock. Jonathan, do you see anybody throwing a stock in there? Give me a well-known stock.
Tesla.
Or something lower dollar, because Tesla, not everybody can afford to own Tesla shares.
Paul says Teladoc.
Okay.
T-Doc or Palantir from
Palantir works too. Let's go with Teladoc. Relatively, let's say, by the way, I like the stock. I like the company. The stock is horrific, but maybe it's finally stabilizing. So let's say you wanted to buy, two people approaching Teladoc. One person says, doing options is so scary and so risky. I don't want to touch them. Okay, let's both go long Teladoc today. And let's see what happens. So I go and I sell a Teladoc put, and my friend goes and buys shares. Okay, so the same day, they buy shares, I sell a put. So they buy stock, I sell a put. Okay, so I sell the $55 put. I should take the stock out of here. Excuse the numbers. So I collect $1,500, or let's just do one. I collect $150. And what happens? Money goes into my account, and now I may be long Teladoc. I am definitely bullish Teladoc. My friend goes out and spends $7,400 for the same thing. I collected $150. He spent $7,400. Let's say the worst case scenario happens, Teladoc falls to 55. So he's down already, huge chunk. So what is the difference between here and here divided by the baseline? He's down like double digits, definitely, on his investment. What am I down? Nothing. I'm up still. Let's say I get assigned shares at 55, because the worst case scenario that can happen is me buying shares at 55. He lost from here to here. I didn't even start losing. This position will show losses, but I want to own shares. I wouldn't buy back the losses. I would just let them be there, paper losses. And then I wake up one day and I own shares. Losses gone. I keep my $150. I break even at 43.40, 43.50-ish, 53. So it is, sorry, I did the math wrong. $1.50 below 55, 53. So that's my worst case scenario. His worst case scenario, he's already down a bunch. So which is safer? I clearly had the more conservative bet. Now, if the stock takes off the high, for a long stretch, he will make more money than I will. But selling a put is not riskier than buying shares. And then I'll get the other argument, you're going to tie up so much equity. I'm going to tie up less equity than actually buying the shares. they don't reserve 100 times 55. So they won't reserve 5,500. They have a formula of sorts. In a low VIX area, they will reserve whatever it is, a small portion, $1,000, 1,300, depends on the stock price, to against that bet. I haven't paid attention recently, but that is the quote safer way of using options than equities. And I can modify my trade. I can do this. I can sell a put and buy a call. Let's say I wanted to be long 200 shares of Teladoc. Then I'll do this. I'll sell a put, collect 150. I'll buy a call, spend 700. So out of pocket is $550. And I'm long Teladoc just as long as he is. Half my positions are hedged. His or not. He spends 7,700. I'm spending 500. Okay, now I'm on the clock. I need a move to win. He can wait forever. So that's the only difference. But that is also a different style. Sell a put, buy a call. They call this a stock replacement strategy as well. Somebody that's nervous about their stock, they sell their stock, cash in the money, replace it with something like this, and basically be long the same stock lower should the hit the fan, or still be long. If the rally comes, they're long already, they're profiting. And if it doesn't, they have a buffer. So stock replacement strategy. Tons of things you can do with options. Step one is join the right group to learn and have a whole year to do it and ask a billion questions along the way. Tons of fun. I hogged the whole time. I left you no time. We started at 4 my time. We're an hour and 20 minutes into it. What do you want me to do?
I mean, this is pure gold. Everybody show Nic some appreciation. I mean, normally I've been in classes where you literally had to pay hundreds or possibly thousands of dollars for this level of depth of instruction. So I hope you all, appreciate that here. I think that, we could talk all day. And I think what's good to know is that you already made some great videos. You were showing that screen earlier, like someone was asking, well, how do I set up an iron condor? How do I you showed us how to set up the iron condor and a credit put spread and some other setups, but you can review these on our help page.
So I call them evergreen videos that are there all the time. And I keep refreshing them whenever I have time and adding to them on request. But here's the thing, this, Jonathan, is that every video I send out on every trade is like 15 minutes long. Right. And in almost all of them, I review the entry. Like, how do I enter this trade? I click on this one, I click on that one, I click on this one, I click on that one. So if you do nothing, but in fact, I suggest you do nothing when you join. Just take the video that comes, look at it, practice with paper trading, write it down on a piece of paper. And then once you're ready, that you're confident that you get the concept, I don't think anyone should sell a spread they don't know, they don't understand. But do it on paper and then ask about it. And when you understand it, try one and see how it works. So you either make $40 or you lose $100 or $60 or something like that. So you'd understand the concept and then start getting you have time. Where's the rush? Everybody, I get people who join is like, where's the trade? It's like, wait, what do you know about this? Is this your first? Then I don't want you to come in and say, what does this mean? How do I close this position? I got this question yesterday. A person that's been in there for a few weeks and suddenly they asked me a question that kind of took me back a little bit. They said, how do I close a spread? It's like the same way you opened it, only backwards.
Yeah. So, you don't know until you know.
Right. No, I'm not making fun of them. I was surprised with the level of the question. So what I'm saying is it would have been better to not take the spread until you know how to use it, because that's why I say practice, because it is, you get yourself mechanically okay with clicking here. That's what I do. That's what I do. Otherwise, under pressure, you need to close it before things go sour and you're hunting and pecking you're going to make a mistake. You're going to be late. You're going to make a mistake. So practice, and hopefully the trades are boring enough to where a minute or two is not going to matter much, but sometimes under duress. I'm noticing this now that we have, what is this? Teledoc. Look at this trade, 2,700 and 2,700. So this is like an iron butterfly. So somebody's saying that they bet that the price is going to be here 47 days from now. So that person or that entity is selling, the seller is most likely the smarter person, collecting 800 and 700, so $1,500 for one contract. What do they need to win? They need price to be within $15 of $75, and they win. So what they do is they do this. That's pretty crazy. They sell both calls and puts at 75. So that's their trade right there. So they're selling this and selling that. So they're collecting 800 here and then collecting 700 here. If price is within $15 on day of expiration, they made money because that value will drop to that value. So let's say price is at 65, 47 days. Then the price of this spread will be within $15. So they would win. This one would win. This one would lose a little bit. Overall, they collected 15. They paid back whatever, $1 to close it. They're golden. So that's a market maker, by the way. You don't want to bet against them. I'll tell you how you use that information. You don't buy a put down here and you don't buy a call up here. Chances are price is not going to be higher than 15 or lower than 15 in the next 47 days. That's what that says, because that person is working against you, and I'm not smarter than them, so I respect them. So that's how you trade that. So you can sell a put under 60 and most likely you'll be fine, and sell a call spread of over 80 and 95 and you'll be fine, because they're going to defend your position for you. That's wonky talk for saying, be that little fish that swims under the shark. Let the shark do the work, and you just find the place where you can swim and not be eaten by something.
That's a good analogy there.
Yeah.
And you said a lot of things here, like, oh, this isn't a trade recommendation. I'm just showing you how to execute this type of trade. But for everybody who's been asking about the chat rooms and the mentorship, I do want to answer that really quick. Tonight through midnight, we're doing a special deal for half off of the entire year, and we're giving you a free laptop. So you should find the link in the chat rooms of this live stream or in the description. And then you've got my contact info. If you need any questions, I'll be here all night to help you get started. And I'm going to stick around after Nic leaves. He has to go make a strategy video for the chat room while I show you the chat room.
I do. I'm late already, but now the futures are open. I can go peek and see what's going on in the world. Who said what? Somebody fart somewhere in the world. We'll see what happens. Here's what I suggest. It's not free to try, but it is free because you get your money back if you don't like it. Right. I'm going to tell you that I will be shocked if you don't find value in there. And if you go into it with the idea of, this is an education and the course is so long and it's on my time frame and it's relatively cheap, it is cheap. You can pop in and ask, what did I miss? Whenever you want. You don't have to be in the chat room all day. And you have 2 chat rooms to choose from, the chat room and the live room, where you can get instant answers. Let's say you're stuck in a trade. You pop in, I'm there. 250 people are there. Some of them can answer your questions too. So if you're serious about leveling up your game, I think you'll like this. I'm not going to push anybody, but I'll be surprised if you don't find value. And if you don't find value, it's because we didn't know where to point you. That's really what I'm saying.
Yeah, I was literally just on the phone with someone on Thursday that had just finished up a year with it was like a $7,500 program. So and we're charging $6,000 just for the chat room before, without any of the other tools. So
I remember. Yep.
I mean,
I'm not involved in the pricing structure. I told whoever that if I were to price it for my own self, that wouldn't be the price,
Right.
because I know how much effort I put into it. I seriously sit in this freaking chair all day. If I didn't have a dog to walk, I'd probably get scurvy from not walking outside.
Right.
But it works. It's satisfying work, because I'm seeing, especially with the live room, instant results, like the overhead I just showed you earlier. And it's not a one-off. I can take 4 snapshots a day. People say, why don't you record it? Because I can't record 8 hours a day. I mean,
Right.
I do videos after hours sometimes to say, here's what happened today, but I'm just not going to record my screen all day.
I mean, a day trading room is for day trading. And then the swing trades are for swing trading. But we
do discuss everything in it. I started saying, nope, no discussions of anything but day trades. Well, that got to be so hard to police. Then I said, screw it. We'll answer everything in here. So we're talking longer swinging trades as well, but I give priority to the fast moving trade. Like if we catch a fast moving trade, I focus the screen on it and I don't take any other questions. We're just watching one screen. And the advantage is I can see sub 1 minute charts. So we go down to 5-second charts, which gives us an advantage because we see 20 ticks by the time a person with a 1 minute tick sees something. So we literally have the advantage over our competition. Okay, I'm going to get out of here and leave it in your good hands. Do you need me to unshare? I think you can steal it away from me.
Yeah. You're fine. So thank you, Nic. Thanks for being here. I'll see you bright and early tomorrow morning.
Okay.
And then I'll just show everybody where to find everything from here on out. So everybody, let's give Nic all of our appreciation in the chat. So
I appreciate them coming here on a Sunday evening. That wouldn't be what I want to do, but thank God they're here. So we'll see you tomorrow.
Awesome. See you tomorrow.
All right, later, bye.
And so, like I said, through midnight tonight, there is that 50% off deal with a laptop. Someone was saying in the chat, what are the specs for the laptop? It's like a $300 to $400 laptop, the best laptop we can get at the best price when we drop ship them to you every Monday. So whoever has a laptop, then that's 7 days after you purchase. That's the end of the money back guarantee. Then we would send you a form to basically get the shipping address for your laptop. Now, I'm going to go ahead and share my screen here and actually show you what your home base is going to look like each day with the chat room, with Benzinga Pro. And let's see here. So I am going to share Google Chrome. We should be good to go now. And so let me know if you can see this okay, but I'm actually inside of Benzinga Pro right now. I actually should bring this over to, I'm going to stop sharing my screen here really quick. Bring that over to my other screen and then share that one. Thanks for your patience here. But I just really want to show you what it looks like on a daily basis. And you don't have to be a day trader, or you could be. Maybe you work a full-time job. I work a full-time job for Benzinga, and I'm still able to make money with Nic pretty much every day of the week. I might day trade here or there in the mornings or on a lunch break. And this is what it looks like. So you log into Benzinga Pro at pro.benzinga.com. And then you have this chat over here on the left side of the screen. And so for everyone, let's start basic, right? The most valuable part of this membership for someone who's a part-time trader is probably the Sunday instructions, where on Saturday night or on Friday afternoon, he'll say, this was from Friday. He said, very strong finish for the day. It was iffy, and then the bull stepped in. Right here is the link for the charting session, Sunday at 7 a.m. Pacific, 10 Eastern. And then you can give him your tickers on this form if you want him to review specific companies. So then this morning, if you clicked on that link, I was there for 2 hours this morning, going over 130 tickers with Nic. And then down here, he posted this afternoon the recording. So you could click on the video. And so for a beginner, you have the opportunity to see how Nic thinks about 130 different companies over the course of 2 hours. Now, that might sound a little overwhelming, and you don't have to use all of that. But if you want to learn how to trade, that is an amazing opportunity. And then he also gives you a Google sheet here. If I click on that, so you can go back and you can go at your own pace through any of these companies that you want to. You can see you have his notes here, and then he also gives notes on the types of trades that he might consider. And then I could click on this. I could say, okay, credit put spread plus debit call spread. What's going on here with GS? All right, Goldman Sachs, and he mapped out some potential trades there for Goldman Sachs. And then I could see my Zoom thing is in the way here. So I'm going back to, anyways, this screen. My point is you have a 2 to 2.5 hour charting session every Sunday. And I mean, it's just an amazing learning opportunity. Then in addition to that, for those of you who are like, you know what, just give me the picks that I can use throughout the week. I just want some swing trades. Well, then you have the write-ups like this. So this is from Friday, where he gave you actually 3 separate trades on Friday. He gave you Amazon, Snow, and AMD all on Friday. And so I could like click on AMD here. And for those of you who are asking, well, how can I do this? He gives you 4 different ways to execute the trade. He gives you a credit put spread, which we talked about a lot on today's session. Selling naked puts only if you want to actually own the shares. You could buy calls, or you could do a debit call spread. So he gives you 4 different ways to potentially execute the trade on that one, and then 2 different ways to execute the trade on Amazon. You would be getting about 1 of these per day in the chat room here. And it's a great way just to earn while you learn. You don't have to be an expert. You could even paper trade these at first until you get more comfortable. And these are the trades, especially those spreads where you have a high probability of winning, the 80 to 90% win rate with a 12 to 20% yield on the trade. And just day in and day out, you can take advantage of those. And then next up, I'm going to show you how to access the live trading room at the beginning of each trading day. So if you have an active trading question, you just want to reach Nic throughout the day, you can always go at the beginning of each day. He says the plan today, he's saying it's April already. He gives an overview of the overall market. And right here, he says live session. That's where you click into the live session where you can see his live screens. He'll be calling out day trades for those of you who do day trade. And as he was talking about, you can discuss swing trading opportunities in there as well. All right, I'm going to check out the chat here really quick to make sure I'm answering all the questions. Let's see here. Rick talking about pricing. Yeah, so yeah, at this point, yeah, the pricing is great. The 1683 at half off. So let me know if you have any questions on that. But yeah, a lot more people are able, it's a lot more accessible. Not everyone has 10 grand or 7,500 to spend on education because we don't have the government subsidizing it like college. But for me, it's a lot more valuable than college was. Let's see here. Do you send option alerts via SMS or text, or do you have to stay alert in the chat room? Great question, Harshal. So the active trades are only in the chat room. The swing trades, you can actually get an SMS alert for like, you can get SMS and email alerts for these. So like the swing trades here for like AMD and Amazon, those can be sent right to you, and then you get a link to a write-up. It obviously, this wouldn't all fit in a text message, right? But you could say, hey, we have a new trade out, click here to take a look at the Amazon trade. So that's how those would be delivered. Looking on here. Oh, sorry about the spam in YouTube chat. Getting these people out of here. And then just scrolling up. Yeah, I love how Nic explains things. You don't have to be a rocket scientist to understand what he's talking about. So thanks, B Matt. Crypto Burger. If there was a war between Doge and Shiba, who would win based on merit, not hype? I don't have a dog in that fight or a horse in that race, but that might be better for our moon or bust crowd to dig into that a little bit more. All right, I'm going to post these links one more time. It looks like I'm just checking the let's see, we had about 15 laptops available for today's sale. It looks like about 5 of those are gone. So we have 10 laptops left between now and midnight Eastern time. So you got about 3.5 hours to take advantage of that, unless someone gets those first. So I'm posting the links right here into the chat for YouTube and for Zoom. All right, that's good to go. Now, let's talk a little bit more about how you would set this up on a daily basis. Basically, once you get those email alerts, you're good to go on the swing trades, but it's really just nice to log in here in the morning and then before market close or during your lunch break to make sure that everything is moving along as you expected. In fact, what I want to share here is actually my spreadsheet that I'm going to use this week, how you would set this up on a daily basis. Sorry, basically, once you get those email alerts, you're good to go on the swing trades. But I was sharing my I was sharing my own YouTube video there. So anyways, here's my spreadsheet. This isn't Nic's spreadsheet. This is my spreadsheet where I was just taking notes on everything that he was discussing on this morning's session. And then I highlighted some of these that I'm going to come back to. So I made lines on my charts for some of these, especially the ones in yellow. And so then I'm going to set up trades tomorrow based off of those lines or potential trades with triggers. So then I'll just know throughout the week, I'll get a little alert on my phone saying, oh, Spotify is above 160. That's a trigger for my trade. So for those of you who are trading part-time, you're following Nic, this is a great way where you can do your homework on the weekends, just like I was doing this morning, set up all of your alerts, and then you're good to go for the week pretty much. And then you can pop into the chat with Nic, ask him about your expiration date, your strike prices. I had a question for him this morning saying, hey, I didn't take that trade from Thursday that you shared. Obviously the expiration date, has decayed some. Could I still do the same trade, but for another week out? And so he was able to answer that question for me today. It was actually on Chewy. So I'll probably be trading Chewy this week. But so that was a great example where I can still take that trade. It didn't have to be the same day. I can just adjust the strike price and the expiration date. Let's see here. Joe is saying, is viewing options chart like a stock chart? So the options price chart is a whole different animal, but we're mainly using stock charts to analyze the levels for these trades. So if you're looking at Nic's post here, you see like he has his SPY chart here. And you can see this is for the ETF, the SPY. And so if I zoom in, we've got support and resistance levels, and we're trading options. So most of the people in this community choose to use options to trade these opportunities. But really, we're using the stock charts because that's where those price levels are really determined, is where the buyers and sellers come in for those levels of the stock. So you've got the support and resistance lines. We also use something called volume profile, where you can see how many shares are being traded at each price level, things like that. So that's what we're really using on Nic's program. And you have all of that available here within Benzinga Pro. You've got a day chart. I could look at a 1 minute chart, 5 minute chart, and see, wow, look at that monster surge up at the end of the day on Friday. It'll be interesting to see what happens tomorrow morning with that. All right. Just looking at any other questions, go ahead, throw those into the chat. And then just want to re-emphasize here that you don't have to have a huge account to use these trades. Like a lot of these take like $200, $400, $500. So even if you had a $2,000 account, you could, take advantage of these swing trades, build up your skills over time, and then grow up your account over time as well. Some of the other tools that are on here are like our news feed. We've got a scanner. All of this is included with the options mentorship program. So you would get a real-time news feed with everything that's going on in the market and a bunch of advanced scanners and screeners and everything, so you can stay focused on what's important to you. You also have a scanner. Opening up the scanner. So this way you can see your gappers each morning. You could also see what's moving that minute or in the past 5 minutes with some of these price and volume filters. And I know lots of brokerage have scanners. We just find that it's easier to use everything all in one spot. So you got your news, your scanner, your charting, you have Nic's links there. So it really comes in handy for a lot of our members. Okay, just looking at I'm looking at the welcome site here to see who joined us tonight. So, all right, I want to say welcome. It doesn't say a name. I guess I'll say Mr. Patel. Welcome, Mr. Patel. Glad to have you as a part of the program. And then I'm seeing Vincent. Glad to have you on board, Vincent. Let's give Vincent a hand. And then let's see who else came in at the 50% off. Alec, welcome, Alec. Good to have you here. So then it looks like we've got about 7 of those laptops left. So 7 laptops left. Get them while they're hot. Okay, so anyways, we got the scanners, we got the news feed, and you can see that it's a pretty advanced system here, but we didn't always have the chat room available with Benzinga Pro, the chat room was not always available with Benzinga Pro. And so you're basically getting Benzinga Pro for free. You have all these tools, you have a calendar where you can research earnings, or if I look on a different date range, yeah, you can see earnings, analyst ratings, unusual options activity, all sorts of helpful data in here. And then you have your squawk, where you have Benzinga Charlie doing the stock squawk with news, or Zineid doing the option squawk for unusual options activity. So you don't have to use all of this. I mean, if you're brand new, you definitely have a lot on your plate with what's available in Nic's program. But it's just nice to have all of those other tools available for your research purposes. And then just to reiterate here, this chat room is going to be your home base. So to open that, you're going to go to the chat icon up here in the upper left corner. up. It just, for some reason, it took me back to a different screen there. All right. So anyways, you got your chat open in the upper left corner, and then you click close chat or open chat. So that's how you open your chat. If it's not already open. And then there are different channels that are available here at the bottom. So you go to all channels, and then once you subscribe, you'll have access to the Benzinga Options Inner Circle channel. There are some other ones that are included in the other lower tiers. So you can just talk with other traders on Benzinga Pro for day trading, crypto, options. But the one you want with Nic is Benzinga Options Inner Circle. And then you can see here that Nic is responding to some questions. And that's also where Nic posts his swing trades, his weekend videos, and the link to his live trading every day. Yeah, you do get Squawk, Franca. I see you in the chat there. This does come with the Benzinga Pro audio Squawk, as well as all the other tools on the Benzinga Pro platform. Let's see here, no open questions. All right. What are you guys trading this week? I mean, have you, hopefully you can get in there in Nic's chat room, because he has some setups from Friday that are still active. You still have time to get in on some of these setups that he did from today even. So you can see credit put spread, iron condor, credit call spread, and credit put spread. So I'm looking at this, oh, it won't let me zoom in more. But these are some live trades that are available here. So definitely check those out once you subscribe today. MUL calls. Yeah, Mullen Automotive. You know, Mullen was actually, that was moving off of an exclusive news item from Benzinga this week. We look at MULN. You can see that, or was it? So Mullen Automotive was a part of our EV list makers event. And so that huge spike that happened on Wednesday was from our event and the commentary on that event. So of course they came back to earth a little bit, but it's still up 25% from Wednesday, I believe. If I go to the chart here, and then I go to, I mean, you can just kind of see, I think that was Wednesday. So yeah, that huge spike, that was from Wednesday. If I go to 15 minutes and make this a little smaller, I mean, that right there. This is why Nic doesn't really use the news, but you know, there's multiple ways to trade. Nic is basically purely technical minded and fundamental. But this is definitely a news catalyst where, you know, if you had Benzinga Pro, you would have had access to this before anyone else did. You can see that huge volume moving there on Mullen. So yeah, we'll see, Zachary. We'll see how that activity continues this upcoming week. You can see that there's this big bowl here. They came down again. So we'll see what's next. All right, TPX. Let's take a look at TPX. I'm just having some fun here. Sunday night, Temper Sealy International. Is this the mattress maker? Let's see if I don't think we covered this morning. All right, so obvious downtrend here on the daily. And then that makes me want to take a step back to the weekly. Okay. So yeah, looks like this was definitely a support level, but then there's another one down at 24.19. I don't know a ton about this company. I mean, if you're bullish on the company, I would have to take a look at the financials here and say what's the cash flow looking like, all that good stuff. Net changing cash, that's kind of ugly. In the past 3 months, would want to look at the year too. Okay, so for the year, it's not as bad. It's just the past 3 months looked bad. But overall, I mean, I'm not liking this chart. Like, this is where if you liked the stock, you could do something like Nick was talking about. Like, okay, well, if it's come down quite a bit and I like this stock, well, maybe I could sell a put for 20 or sell a put for 24. Just lower your cost of entry. Um, I don't know. I don't know what else to say about this other than, don't lose 26.50, or else, it seems like it definitely has a lot more room to fall there. All right. Respectable long. I mean, it could be. Yeah, and depending on, yeah, it could be an opportunity to get long there. It's just I would want to do a little bit more research on where to put my stops. But overall, I mean, you can see it gap down a lot, so we'll see if it has a catalyst to move back up there. All right. So, any more questions on the chat room? I'm going to wrap it up here within the next 5 minutes. But definitely don't miss out on that 50% off deal for Nic Chahine's chat room, the live day trading, daily swing trade picks. I mean, pretty much everything you need to learn how to trade, period, and especially how to trade options. And then I will share the link here one last time, as well as my email and phone number in there. So if you need help with anything, just shoot me an email or give me a call. And yeah, there is my contact info as well. And I'm excited. This should be a great week. We've got some great picks from today in the educational session. And then hopefully I'll see all of you in the live trading room. Let's see here. Okay, and then just for anyone who watches this later, I'm just going to do this one more time just to clarify this for everyone. So once you purchase, in fact, that's what I should do. I should bring up the checkout page. So whenever you click on that link, say show all windows. It's not bringing up my incognito window. Anyways, once you purchase, you'll pre-apply the coupon code and everything. You log in here. First thing you want to do is you want to open up the chat room. In the upper left corner, it says close chat, open chat, and it'll look like this. So build your workspace, choose a recommended workspace below, and you want to go to this chat room over here on the left-hand side. Then you might have to scroll down here at the bottom to choose the options inner circle chat. So instead of Borat there, I want to click on the inner circle, and that changes the content at the top. And now I can see Nic Chahine. Then step number 3 is you want to scroll up to see today's morning session video. Or if you're looking at this tomorrow morning and you want to access the live trading room, then he'll say something like, where is it from Friday? It'll say the plan for today, tomorrow morning. 2 days ago. Here we go. It'll look something like this tomorrow morning, where it says the plan for today. Here's my update on last night's strategy video, and then live session with the index and futures charts. So then click on live session. It'll take you to the streaming service that it uses, and then click join meeting. And then you'll see that, there's a bunch of people here just waiting for tomorrow morning. But then tomorrow morning around 8:45, 9 a.m., Nick will be in there sharing his charts. And there's also the live chat. Like, this is all live. This was live this morning when he was doing his instructional video. So that's what it looks like for the live trading room. I'll close that for now. And then for the swing trades, you get those from in here. He'll post them like this with a video and then a full write-up of how to take advantage of those swing trades. All right. Thanks for being here today. It's been fantastic. I've really appreciated all the interaction on the chat. And then let's see here. I'm getting rid of this spam in the chat. Move. Yeah, hide user in this channel. Gosh, I hate spam. So annoying. BMAT, yeah, if you're in Nick's room and you want the swing trades emailed to you, shoot me an email at jonathan@benzinga.com. And I will take care of that for you. Yes. And Donovan, yes, this is the course that teaches options. This is the one that you want to learn how to trade options. So you're in the right place. And then I'm looking on the other chat room one last time. All right, we should be good to go. Okay, so here's the info. I'll just leave this up here for a while for the people who are still watching the stream on YouTube, but I'll be checking my inbox. So I look forward to seeing all of you soon. Take care, everyone. Have a great week.